If you want to learn how to catch zero drawdown sniper entries like this, and this, make sure you watch till the end of this video because I'm going to be explaining just how to do that. So if that sounds interesting, let's get into it. Before we hop on the chart, there's one thing you must do that's very important in order for you to actually trade and understand how to catch sniper entries and zero drawdown trades. And that one thing you must do is subscribe to the channel, because I post videos like this on a regular basis teaching you forex trading strategies that you can use to get sniper entries like this and zero drawdown trades. So if that sounds interesting, subscribe to the channel and let's get on the charts, bruh. Seriously, subscribe. When it comes to sniper entries, there are certain things that you have to look for that have to be in play when you're looking for sniper entries, right? So there's a pattern that you need to look for if you want to get the sniper entries, and those patterns are called M and W formations, or you can also call them double tops and double bottoms. I prefer to call them M and W formations, right? So what you're going to be looking for, you're going to be looking for maybe for an up move, right? So let's say you're looking for an up move like this, right? Then you have your M formation like this. So what you're going to be doing is you're going to be entering somewhere in here, right, at the highest points. Entering in here, you're going to put your stop loss here. You're going to be trading this second leg. So instead of waiting for the market to come all the way down here before you enter your trade, you're going to be entering all the way in here, right? So that's going to give you the best risk reward and a lot of room to make profits. So you're going to be looking for certain candlesticks here. Also, the same thing goes for the W formation. Let's say you have a downtrend like this. So you're going to be looking for a W formation like this, right? So you're going to be looking to enter somewhere in here. The M, you're going to be looking to enter somewhere in here. And then when you enter, you're going to expect the market to move all the way down like this, right? So you're going to be, basically, where you're going to put your entries is like this. So let's say, let's use an example like this. So let's say you put your stop loss there, and then you're going to catch something like this, right? The risk to reward depends on you, on your take profit levels, right? So like this, your stop loss has to go below or above the second leg. So this is the second leg. The stop loss has to go above it like this. Don't put it exactly at the highs. Give it some room to breathe. Maybe like 5 pips, 10 pips below or above, like this, right? So you put your stop loss there or here, and then you take it down or take it up, right? So there are certain candlesticks that are used as confirmation for you to enter, so that you can enter those sniper entries, right? So I'm going to be showing you those candlesticks right now. There are basically 4 candlesticks. So these are the 4 candlestick patterns that you're going to be looking for. You're going to be looking for star formations, hammers and inverted hammers, railroad tracks, and engulfing candles. These are the candlesticks you're going to be looking for. So I'm going to be showing you what they look like right now. The first one we're looking at here is the hammer candlestick. So it basically looks like a hammer, right? The hammer that we usually use in our lives. So this is a hammer. This is a shooting star. It's also an inverted hammer, right? This is also an inverted hammer, because if you look at this, I don't know, there's no difference between this red one here and this one here. It's the same thing, right? So you can call it a shooting star. I prefer to call it an inverted hammer, right? So this is a hammer inverted. It's basically this hammer here inverted, right? That's why it's called an inverted hammer. So you're going to be looking for these candlesticks on the second leg of the double top or double bottom M and W formation. The second one is the railroad track, bearish bullish railroad track. So this is basically how it looks like. One candle up, the next candle down, and they're basically almost the same size, right? So one candle down, one candle up. That they are basically the same size, almost the same size, and they are mostly from like 10 pips or 12 pips or more. Don't trade the ones that are less than 10 pips, or let's say, depending on the pair, right? So don't trade the ones that are like 6 pips, 5 pips. Those ones are not really railroad tracks, right? So this is also how it looks like. Let me see if I can zoom in a bit. Yeah. So this is what it looks like. One candle down and one candle up. They are all basically the same size. Sometimes it might be a little bit smaller than this. Like the candle that's meant to be the same size. Like for example, you have this red candle down, and then this green candle might just end maybe below this or so. It's not exactly the same size on the charts, but sometimes it might be lower, sometimes it might be higher, right? It also looks like what's it called, engulfing candles. Engulfing candles is the same thing almost, right? They look similar on the charts, right? So this is an engulfing candle, and an engulfing candle is when the next candle and fully covers and engulfs the previous body of the previous candle. The candle of the sorry, the candle, when the current candle covers the previous candle. That's your engulfing candle. So you can see this green candle completely covers this red candle. And you can see this red candle here covers this green candle. So this is a bearish engulfing. So when you see the market going up and then you have this bearish engulfing on the second leg of the M or W formation, so that's when you look for sell, and then same thing here for the buy. So the next one and the last one is evening star, morning stars and evening star. I basically call them star formations. I don't usually add this morning and evening. It doesn't really matter to me. It's just the pattern that matters. So I call them star formations, right? So this is a morning star and this is an evening star. So when you have a second leg, so imagine you have, let me draw something here. Let me grab my pen. So imagine you have something like this here, like this, right? So this will be your second leg. You can enter here or you can enter here, right? So that'll be your second leg of your M formation, of your W formation. Let's say this is an M formation, right? So you have your first leg here. Market comes down like this and then it goes up like this, and this is your second leg. You enter either here or here, right? Put your stop loss above or below. So that's how the star formation looks like. This is also how it looks like here, zoomed in, right? So you have your, let me grab my pen again. Let's see, yeah. So you have your first leg here like this, and then the market goes up, comes back down to this place. This is your star formation. You enter here, right? This could also, this is a variation of a railroad track pattern. So this is just where they just give you an extra 15 minutes, right, in between this. If you remove this, if you clear this out of the picture and you put this together, you see that this is just either a railroad track or an engulfing candle, right? So this is a variation of a railroad track or an engulfing candle. Or if you just cancel this out. So that's your star formation. Those are the candlestick patterns that you need to look for when you're trading the markets. Now let's get back on the charts. So now, since you've learned, you have seen the candlesticks that you're going to be looking for. Now we're going to be looking at on the charts. We're going to be looking for this M and W formations to take. So here are a couple of examples of this M and W formation. So here we see the market was going to the downside, right? The market was going to the downside, and then what happens? The market gives us this beautiful W formation right here. What we're going to be looking for is those candlestick patterns. So what candlestick pattern can you see in here on the second leg? So this is the second leg. What can you see? We can see this candlestick is an inverted hammer. Not only that, this also looks like a combination of a star formation, right? So you're going to be entering your trade here. Put your stop loss below like this, right? And then your stop loss below like this. And then you can go for how many pips you want to go for. So this went for about 50 pips, right? So let's look for another example. We have another example here. So we can see the market was going down, right? Market was going down like this. Then it came and gave us this W formation right here. So we're going to be looking for the second leg. The second leg, where is it? Yeah, this is the second leg right here. Right, so we're going to be looking for those candlestick patterns. So they give us a couple of candlestick patterns here. We have this candlestick pattern here, and we also have this candlestick pattern here, right? So anyone you enter is good. If you entered early here, that's still good. Why? Because your stop loss is going to be somewhere here, so you're safe, right? And if you entered here, even better. This is your hammer, right? You can see this is a hammer candlestick. Let's just zoom in. You can see this is an inverted, no, this is a hammer. Sorry, it's not an inverted, this is a hammer, right? So you're just gonna enter here on the close of this candle, put your stop loss below here, and then you're gonna catch maybe like 60 pips. This went for about 60 pips, right? So let's see if we can look for an M formation, right? So here we have an M formation. We can see the market is going up like this. It's going up, 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 right? So we have this uptrend like this, right? We have this uptrend like this. So what happens? We have this M formation here like this. So what candlestick can you see here on the second leg? This is the second leg here. This is the second leg here. So what candlestick can you see in here like this? Well, we have our railroad tracks or engulfing candle, right? So you enter here on the engulfing candle or railroad track, and then you put your stop loss above here, and then you can see this went for about 50 pips, right? So that's all, but that's not really all. There are a lot of things that come into play when trading these sniper entries that you have to know. And if you want to know more about that, click the video on your screen and it will teach you how to do that. So I'll see you guys on the next one. Peace!